Hello and welcome, it's Kyle here, and in today's video we are going to be taking a look at Warren Buffett's recent purchases and what we can learn from them in order to beat inflation. There's been some really scary news lately in the finance sector. See, inflation in the UK is expected to reach over 18%, primarily due to the rise in gas prices, and inflation in the US is currently sitting at over 8%. Now, both of these figures for inflation for both countries are ridiculously high by any historic standard. If you're an investor, you're probably wondering, how can I protect myself against this inflation? Now, fortunately for us, Warren Buffett's Berkshire Hathaway has recently filed its latest filing. And in this quarterly filing, what we can see are their 5 largest holdings. So let's take a look at this and see what we can learn. Now, in Q2, Berkshire Hathaway did land up spending $3.8 billion on net purchases of equities, but if you compare this to Q1, which is $41 billion, it's definitely a lot less. But good on him though for purchasing in Q2, because Q2 compared to Q1 was a much better buying opportunity if we just look at the S&P 500 index. Probably the most notable addition in the recent filing is the 3.9 million shares that Buffett bought again in Apple. This means that as of 30th of June 2022, Berkshire Hathaway currently holds 895 million Apple shares, worth in total roughly $122 billion. And if we look at their overall portfolio, currently Apple accounts for roughly 41% of it. So this is definitely a very important stock to him. Now, it should come as no surprise that Warren Buffett continues to pour an immense amount of money into Apple because it is his favorite stock. And there are 2 reasons for this. The first one just being that he loves the brand loyalty which the customers have for the brand. And the second one being an interesting one, because Berkshire Hathaway is so large, you see, it's the 7th largest company in the world. Their population for available opportunities is very, very small. You see, in order for a company of that size to actually get a decent return, they have to look at companies larger than them in order to actually get that return. And you see, being the 7th largest company, there are only another 6 companies to choose from. And based on Warren Buffett's analysis, he has decided that of those 6, he's going to side with Apple. But altogether, Berkshire Hathaway's top 5 holdings currently account for about 75% of the portfolio, with Bank of America, Coca-Cola, Chevron, and American Express rounding out the top 5. It should come as no surprise that we have banking and consumer staples rounding out the top 5. Buffett is a huge believer in stable, steady industries, and these industries fit this criteria perfectly. Obviously, it's also very interesting that we do have Chevron, the oil giant, sitting there. Warren Buffett has been pouring money into oil companies over the last 1 to 3 years. And Warren Buffett's history was a little bit of a hit and miss. You see, back when he did ConocoPhillips in 2008, that didn't turn out to be such a good investment. But over the last 3 years, his investments into Occidental Petroleum and Chevron have been doing tremendously well considering the post-pandemic oil boom. So what can we learn from these purchases in order to understand how we can actually better fight inflation? The main thing is it just quite simply comes down to our understanding of the business. If we can understand how the business is able to generate money, we can also understand how the business is able to hedge itself against inflation. Now, in theory, all equity should offer a buffer against inflation. I mean, the higher the prices are, that means the higher their revenues are, and the higher their earnings should be. But that's only the case if they're actually able to maintain their current margins. You see, in a high inflationary environment, what you can find is that although their revenues may increase, their input costs may increase even more. And when that happens, you start actually digging into and reducing your profits. So what's the key that we can learn from Warren Buffett? 2 words: pricing power. What you want to look for is you want to look for companies which have pricing power. And companies which have pricing power, companies which have the ability to pass on the higher input costs to their customers. Now, we do need to remember economics very briefly here, and economic theory states that the higher the prices, the lower the demand will be for a product. But what we find with certain companies which have exceptional pricing power is that even if they have higher prices, they are still able to maintain the same level of demand for their products. So all of that being said, how do these top 5 holdings fare when it comes to their pricing power? Now, Apple has always been increasing the price of their iPhone lineup over the years, and has that affected the amount of iPhones they've sold? No. If we go ahead and look at the charts, we can see that as the years have gone on, the price of the various iPhone models have steadily been increasing. And we'll go ahead and actually look at how this has affected the units sold over the period. Remember, Apple, they no longer produce the units sold. So you look at the period from 2015 to 2018. But what we can see is that over the period 2015 to 2018, despite the increase in the price of the iPhones, we see that the amount of units which they're actually able to sell has remained fairly steady. And this goes to show that Apple really does have tremendous pricing power. The next one we're going to discuss is Bank of America Corp. Now, banks in general are a very good hedge for inflation, and I'm now going to explain why. So when the Fed sees that inflation is going out of control, what they normally do is they raise interest rates. And by increasing interest rates, people no longer want to borrow money. And when you have people no longer wanting to borrow money, you no longer have people wanting to spend an exorbitant amount of money. You see, it's the spending of money which is driving up the price of goods. The more you have where people are spending money, there's more demand for stuff, the more the price is going to increase. So by increasing the interest rates, that demand is going to taper off slightly and the price of things is going to decrease. But anyway, back to the point. When the Fed increases interest rates, what that then does is that banks can then charge high interest rates on their loans. And when banks charge high interest rates on their loans, it results in higher interest income. Higher interest income for the bank means a higher share price for the bank. This goes to show that because of the relationship between the Fed and the banks have an inherent stability against inflation, and it goes to show that they also have inherent pricing power. That brings us to the next one, which is Coca-Cola. Now, Coca-Cola is a consumer staples giant, and consumer staples companies are known to be good hedges against high inflation. And what is the reason for this? Well, probably the most obvious one is that they produce products and services which are a necessity to human life. Whether times are good or bad, people will always be purchasing their products. Now, in the case of Coca-Cola, why they are an exceptional consumer staples company is because of two things. They have such iconic branding, and they also have one of the most loyal customer bases in the world. Now, because of this, in times of high inflation, what they're able to do is they're able to raise their prices if need be in order to keep their margins intact, and it's unlikely to affect the amount of units which they are going to sell. So this goes to show that Coca-Cola does have tremendous pricing power. That brings us to the next one, which is Chevron. Now, Chevron is an oil giant, and there is a correlation between oil and inflation. You see, you need oil to produce energy, and you need energy to produce goods and services. If the price of oil rises, the price of energy rises. If the price of energy rises, the price of goods and services rises. This explains the chain reaction and the relationship between oil and the price of goods and services, i.e. inflation. So because Chevron is an oil company, inherent in it is the fact that it has good pricing power, as its primary product is oil, and oil is correlated to inflation. That brings us to the last one, which is American Express, which is a credit card giant. Now, how do credit card companies make money? Essentially, whenever you guys go ahead and transact, value the transaction, and they take a small percentage cut of that transaction and pocket that as revenue for themselves. Now, in times of high inflation, how does this affect them? Well, in times of high inflation, what you find is that the value of transactions is increasing, right? Because goods are becoming more and more expensive. So when you have a higher transaction value than before, they are taking the same percentage cut, but it's going to be of a higher transaction value. So in return, they're going to be making more money. More money means a higher share price, and this essentially explains why they have very good pricing power. As you guys can all see, the top 5 largest holdings in Berkshire Hathaway are really in a good position in order to contend with inflation. You see, their pricing power can either stem from the love which the customers have for their products and services, or the pricing power can stem from the inherent stability which the business has and its relation with inflation. So that being said, that brings us to the end of this video, and I'll see you all in the next one.